crisis. But now we want to discuss investors and investment. What are the kind of considerations and discussions? I'm going to hand it over to our very able moderator, Courtney Fingar, who we heard earlier, Editor-in-Chief, Investment Monitor. However, I must tell you that there is a group of Tobagonians who came here specifically for Awosika, and I think they're still being consoled that she's not here in person. So to my Tobagonians, we love you and thank you for coming. She's absolutely here, but she is here remotely. So Courtney, I throw it to you.
Thank you very much, and thanks for letting me come back for another panel. I hope we can maybe even tempt people out of their break with our excellent discussion in a moment. This is quite a useful panel, I think, because it is a fireside chat focused on investors, and that's what really we've been talking about all day at the conference is investment, the role it can play, where it's needed, where it's coming from. So I hope we can shed a little bit more light on that topic, and we have some individuals very well placed to help guide us through that. Let me introduce them to you. First, we have Audrey Richards, who's the director of the Caribbean Alternative Investment Association. She's also a consultant with the Development Bank of Jamaica, leading the bank's program for the development of the ecosystem of private equity and venture capital in Jamaica. And she's been involved in various capacities in the Jamaican capital markets for a number of years. Welcome. Thank you. We have His Excellency Dr. Audrey Thomas, who's co-chairman of Upturn Funds and co-founder and CEO of Upturn Funds Caribbean, which is a venture capital fund and an advisory company focused on initiatives to reach those that are traditionally underserved. He's also the Director General for Global Finance and Projects for a UN NGO and functions as a UN Peace Ambassador. And we have joining us remotely Stephen Snyder, Managing Director for Operations and Partnerships at JetBlue Technology Ventures, and JTV is JetBlue's venture capital arm that invests in and partners with early stage technology startups in the travel, transportation, and hospitality sectors. Thank you for joining us. Now, if we can start maybe with looking at, I guess, a problem, and then we'll talk a little bit about solutions. And something that came up in a previous panel, there was a comment that there is not an absence of capital ready to be deployed. There's an absence, not an absence, but maybe not quite enough bankable projects to invest in. So let's talk a bit about how you see that, and I'll ask Audrey first, and then we will move on. Oh, and I see we have another panelist who's joined us, so I'll interrupt myself to welcome her. I was waiting to see your face on my screen. That is Dr. Ibukun Awosika, the first female chair of the First Bank Nigeria, also an active investor and a Netflix producer, a busy woman, and she also serves as the chair and board member on various corporate and nonprofit boards around the world, among many other roles and accolades. Welcome to you for joining us. Let's begin, and I would like to ask Audrey first, if I may. First of all, do you think it is the case that we have a dearth of investable projects around the region? And is it an issue of the projects not being of the right type or perhaps not the right scale? And do you think there is ready equity investments, for example, ready to be deployed if the right projects are found?
Well, I think one of the issues that we're faced is that, yes, there are projects, but I think one of the mistakes that we make is trying to think of investable projects as a homogeneous bunch, and the capital that is there also as a homogeneous source of capital. And the reality is that you have different sources of capital and different types of investments. So you might have, I think traditionally what we've seen in our markets is a lot of debt capital, and then you're told that it's almost a truism that there is no capital to fund the projects. But in many instances, debt capital is not the right source of capital for a lot of the projects that need to be funded. So we have had to look at how can we widen access to capital by looking at the various types of capital. If you're a startup, you're not going to get loan financing, or you get loan financing in very, very, you know, you'd probably have to put up lots of land or some other collateral and other sources of cash flow to be able to qualify for debt. So you need a different type of capital from, say, a mature company that has thrown off a lot of cash flow. So I think it's the mismatch, and it's a mistake that we've made over many decades of trying to match the few sources of capital with the needs in the market. So a lot of the work that we have done through the Development Bank over the last, I would say the last 10 years, has been how can we create access to finance for businesses that are seeking finance. So some of the ways that we've actually done is, so we've looked at the development of the private equity and the venture capital markets. And those markets also are not, you know, homogeneous bunch. It's different. A private equity investor might have an appetite for, you know, energy projects as opposed to technology projects. So again, you know, have to drill down to seeing what it is that investors want to invest in and what are the projects that we need to match against. So I think the more we create opportunities for entrepreneurs, for businesses to be able to present to investors their needs, and more opportunities for funds of different types, whether it's debt from debt funding straight down to angel or venture capital, private equity, infrastructure funding. The more we create those opportunities, the more we create the knowledge in investors as well as entrepreneurs to actually understand what they need and what are the sources, the more you'll be able to see actual transactions taking place.
So you don't see it as an issue of scale. It's not that the opportunities are too small, because this is a criticism that we often hear when we talk about investment in this region. It's just more about the right opportunities and the mismatch there.
Scale is an issue depending on what your particular appetite is and what your particular strategy is. If you're a small SME fund that wants to invest, or a microfinance entity that is investing in small businesses, scale is not an issue. If, however, you are, you know, a large institutional investor from overseas, there are small companies are our large companies in the region. So yes, there's that mismatch. Again, you then have to look, how can you actually package that to actually meet the needs of the entities on the ground? And I mean, you know, I have to, you know, pitch the thing that I know best and I love best, which is the equity markets. A private equity fund or some kind of fund that can mobilize capital from different sources, say a 20, 30, 40, $50 million fund, which is a pretty small fund. But you then are targeting investments that are 3 million or 2 million or 5 million. Scale is not going to be the issue. It's just the strategy and where you raise funds from and how you're going to deploy that.
Right. Thank you. I have a few more questions I have for you, but we will return. Dr. Thomas, what interests me about what you do is that you're involved in really a lot of social enterprises, and there's a huge amount of interest in the investor world right now in the Sustainable Development Goals and ESG. So in theory, this should make the types of projects you're doing extremely attractive. Is that the case, or does there remain also a mismatch in terms of where investors want to put money and how you are trying to raise funds for your projects?
I would say there absolutely is a mismatch. It's not a mismatch of ideas, it's a mismatch of how the system works. There is a deficit in terms of understanding what is required to qualify for the funding, and the concept by the entrepreneurs that the idea is enough. You see, I often will share with entrepreneurs that the presence of all the ingredients to create an outcome does not guarantee the outcome will be created. It's how you integrate those ingredients. So most investors, most entrepreneurs would say, these are my ingredients. This is the market, this is my idea, these are the possibilities. And in their mind, that's enough. But what they don't understand is that most of the investors do not have local knowledge. Most of the investors are not your retail bank. So the investors need a lot more than those things. So we have found out that that's a key issue. And helping entrepreneurs scale that divide is very important. So I believe there is a lot of undeployed capital. I don't believe it's a capital problem. From my vantage point, I really believe it's a wisdom problem.
So what you're talking about is essentially, in some ways, an absence or a gap in the information being supplied to investors and even the packaging of the opportunities.
Absolutely. Yes.
And do you see any improvement and any advancement there? Do you see any changes over the years that you've been involved?
I believe that the changes that I see is that there's a greater awareness that investment options are available beyond the traditional sources. So I believe there's an increase of awareness, and I believe that forums like this are really, really helping. But I do believe that the major gap would be a wisdom gap and a passion gap.
So we're dealing with a lot of gaps here.
That's right.
To fill. I'd like to turn to Dr. Awosika now. And how do you, first of all, do you have anything you would like to react to or add from what our first two panelists have said? But more importantly, as an investor, what kind of opportunities do you look for, and how do you view the Caribbean as a potential area of interest for investment?
Thank you very much. I think I really like to look at it actually from two sides, because first and foremost, I'm an entrepreneur. I always said 5 years. That's my primary life. Everything else came as an offshoot of what I do as an entrepreneur, including chairing and serving the boards of financial institutions. In reality, there's a lot of, I'm listening to all of the comments, and I know that those are some of the issues that we have to deal with at a really high level in Africa, and especially in my country, which is a 200-something million country of people that are highly entrepreneurial. So moving between being able to fund the dream and translate the dream to reality, financing was always an issue. So all of the issues that are noted for the Caribbean are problems that we've had to navigate. They still exist, but we've also been able to solve some of those problems in many ways. Now, some of the challenges of funding the SMEs, the small, medium, and micro enterprises in itself is an opportunity for certain kinds of entrepreneurs who are financial industry entrepreneurs who can, by structuring the right kind of fund, be the ones who then take the funds from the bigger organizations internationally and trap it within the system of the Caribbean to work. And because they will have local knowledge, they can then deploy funds like that for specific industries. I think one of the things that would be key for the region to do is first and foremost to define who it is and what it wants to be. And in defining who the region wants to be, economically wise, the kind of businesses that will be pitched to attract investors will be defined. And once that is defined holistically, there will be a pipeline that will follow, which means the bigger guys with the big picture of what needs to happen, but there will be all sorts of related businesses at different levels that are attached to the big picture, which would help the smaller, because once you have a pipeline feeding, then you're able to attract the right kind of funding across the pipeline all the way, because you have the big guys, you have the smaller guys who will feed the big guys. You will develop all the small support businesses related to the think about the huge tourism potential that it has, or that it takes in many different ways. And then if I then sit down and think about what are the businesses related to that, what kind of funds are related to those kind of businesses within that industry, what are the related businesses that can be developed from medium to small to micro that will support that industry, and what kind of funding can be structured that is derived fund, because there's a feeder, it's easier for the kind of companies that will feed those organizations with reasonable funding. Like His Excellency said, it's not a shortage of money. There is money available in the world. It's about having the right model of what it is that you're looking for money for, making a good business case, and creating a pipeline that allows the money to come to you. And scale in itself might not be an issue if it's coordinated across the whole of the Caribbean. The individual islands themselves might not have the individual scale, but if you look at the whole region as a business, when you think, it's like looking at West Africa right now, or looking at the African markets. Nigeria is a 220 million or so people country, but there are countries around us that are 5 million, that are 1 point something million, that are 20 something million, and all of that. So primarily, Nigeria is your target market. However, there are many advantages that makes the other countries attractive for investors. But you want to invest in those countries with your eye on Nigeria as a market. Now, with the African Free Trade Agreement that has been developed now, that makes it possible in some ways, because it literally means you can build your business in any of the smaller countries if that's where you find most conducive. But yeah, the markets are structured for you to be able to. That's still something that is being executed, but that's probably the kind of model. And I know that the Caribbean has been quite aggressive in its collectiveness in trying to do. I mean, when I was talking to Stephen earlier, talking about JetBlue and the connectivity that would be required in order to make business within the Caribbean. And I actually left Dominican Republic last night, got into London this morning, but I couldn't come to Trinidad and Tobago because I realized for me to do that, I'll have to go into Miami, spend the night in Miami in order to get into Trinidad today. But unfortunately, I already have a commitment that needs me to be in Madrid on Saturday. So that took that option off the table. Now, if I had a direct flight I can take straight into Trinidad yesterday and be able to get out today, then I probably would be in Trinidad today. So some of those things that are challenges within the region, they themselves are the opportunities. But the opportunities becomes bigger once it's linked for the entire market as one. And that will make it easier for investors to make the right kind of decisions because they can find the skill in the collective market, and having the pipeline from the biggest to the smallest will allow the growth that is required, and you can structure the right kind of funding and find the right kind of financial entrepreneurs who themselves are the ones creating opportunities for the local entrepreneurs who need funding.
Thank you very much. And I'm sure Stephen will have something to add, as you've already name-checked JetBlue, but if I can ask you just one quick follow-up question first, and that is how you see the role of the public sector in all of this, because we're talking about private capital and private investors and how we can match that with maybe entrepreneurial ideas. What, if any, is the role of the public sector in trying to facilitate all of this?
I think the vision is something that the public sector could really try out. You know, having a summit to see and define. I remember when I was in business school, there was a case that we did, and I went to business school in Barcelona, business school, and we did a case in my marketing class on Spain. And the marketing professor said to us, when you think about Spain, what do you think about? And how do you turn what you think about into a business vision for Spain? And at the end of the day, we all thought about it. It was amazing to see that at the end of the day, we closed off on the sun and the fun. And within the sum and the fund, we define the bigger picture of the kind of related businesses that will make a difference for Spain and how they can draw the right kind of investment to build that out. Now, that's something that government is more than able to drive, to create the right and enabling environment that is not killed every time there's a change of government. They can create the policy consistency that allows a vision that is imagined for the region, which will not be short-term. It will be more medium to long-term vision, and different stages and levels of it will be built over time. Now, if government can have a sense of responsibility to build and maintain that vision, no matter who comes into power, then it becomes possible to long-term. And that will give investors confidence that if I start investing in an area that is a long-term value, I will not be in trouble in 4 years or 5 years once there's a change of government. Those are the kind of policies. And then the government can also invest in organizing the educational sector to create the right kind of manpower that will be required for whatever kind of industry the government wants to focus on for the region. We could do that. We could create licensing or opportunities or waivers to attract investors to come. They can create advantages in order to grow certain sectors, because those are the sectors that they realize that for the long-term vision of the region will be critical.
Thank you very much, and I think it's a question I may pose to our other panelists as well, but I want to bring in Stephen here. Stephen, how do you decide which ventures are, I guess, worth JetBlue Technology Ventures to look at, and are you finding enough good investable startups as you look around the region?
Yeah, Courtney, thank you so much, and thank you for everybody for the investment forum for having me. I regret that I can't be there with you. It's cold and rainy. Today it's sunny, but yesterday it was all rainy and cold. It's less than 10 degrees here in San Francisco, so I'd much rather be there. So I can't be with you. But it is a very interesting day today, the 9th of November, in terms of following the headlines here in the States. So obviously we had a big election yesterday. We're still trying to sort out exactly what happened there. But this is also a huge day in technology investment. This morning we met up, what used to formerly be called as Facebook, announced 11,000 layoffs, including 2 friends who I found out they were laid off
We may have to interrupt you in a second, Steve. Sorry. You see, you're very excited about these innovations. Thank you. I just want to be able to return a little bit to some of the conversation points, but thank you very much. And we want to be able to save some time for the questions. And I wanted just to first give you an opportunity to mention about, I wanted to come back to the point about the public sector and what can be done to help sort of increase pools of capital and make sure also that the local business communities are properly funded and developed. And you know, we heard a comment earlier from a major international investor who said, well, the only thing you can do is, as the public sector, is get out of the way. But there must be, there are a lot of government officials here, people working investment agencies who are keen to help grow local ecosystems and encourage startups and bring in capital. What could they be doing? And I'll start with you, Ms. Richards, and then move on to Dr.
That
Thomas.
comment about governments need to get out of the way, it's right and it's wrong. In that eventually governments need to get out of the way if there is a private sector that is operating the way it needs to operate.
Yeah.
But in a lot of instances, what you find is that there are gaps in the ecosystem. And the only entities that are going to do something about addressing the gaps actually tend to be the governments. And in many instances supported by international development partners. So the private sector is not, in many instances, going to be the one that's stepping out there and taking the risk in a new venture. So once there are gaps, in a lot of instances, the government steps in. And just speaking specifically on the work that I've done with the development bank, we recognized that the issue of access to finance really has been a long-standing issue. So we did a study, and you know, all the various things came up as usual in terms of entrepreneurs not ready. So we had to put in place capacity building programs. You have entrepreneurs not have a good project, but not enough collateral. So we put in place a collateral guarantee program where we support them, making up that gap. We also recognize that debt financing was not, in many instances based on the capital structure, many issues. So equity financing was something that was done. Hence we started the Jamaica Venture Capital Program. Now that program really set out to develop the ecosystem. Because as I mentioned earlier, entrepreneurs on one side need equity capital, but equity capital investors have different strategies. A venture capitalist, like JetBlue Technologies, has a different risk appetite than an entity that's investing in mature, stable companies and is just looking to, reorganize them for the next leap of growth strategy. So what we did was we developed a multifaceted program. But in developing the program, one, we wanted to benchmark it globally. So with the assistance of IDB, we looked at what was happening in Latin America in particular, and in the US. And in particular, we looked at what the Brazilians did to develop their private equity markets, which was what they call the Innovar program. That is a multifaceted program where you're not just looking at mobilizing capital, because you can mobilize capital and you mobilize it, but there's an ecosystem that's not ready. Entrepreneurs are not ready. Their businesses, even if they have a great idea, they don't know how to package that business model to be able to present to an investor. As a company that's, as a mature company, you may have a business that's been in maybe a family business, and you've never had to put in place the kind of corporate governance or structure. Because it's a family business, you do what you want. So what we've had to do was work with the entrepreneurial and early stage ecosystem, the knowledge building, the business modeling, development of business models, as well as the knowledge building on all sides, knowledge building of entrepreneurs, how do you present to an equity investor? What is an equity investor looking for? What does your business need to look like in order to present to an investor? On the investor side, funds, whether it's a venture capitalist or a private equity fund, they raise capital from different investors. Pension fund investors are a natural long-term investor, but our regulatory investment regulations for pension funds did not allow them to invest in a private capital. So we had to lobby the government to get that modified. So, and as I said, we developed what we call an investor panel, where we invited the largest institutional corporates and even the angel investor network to the table in order to, and we brought in trainers from overseas, from London, from in the US, to train them, to get them to understand the new asset class. Many of them having only ever invested in listed equity, real estate, and government securities. So now asking them to put money into a private equity fund, it had to be a process. So that was the role of government. Now, having done that, the private sector, in a lot of instances in Jamaica, is actually taking on their own investments. They don't. We've also acted as an anchor investor in these funds.
Okay.
So being an anchor investor, we brought the others to the table and brought in more investors.
Because that can add some reassurance, I guess.
Exactly. So this is what government has done. So having done that, is the market ready to take off? In some instances, yes, so we can exit some things that we're doing. You mentioned that I was a director of the Caribbean Alternative Investment Association. We actually developed that and patterned that off, other regional associations, including Ibukun, which is out of Brazil. And the whole point is that the private sector, having been empowered, having gone up the curve when it comes to knowledge building, they can now take on the training, the capacity building. A big problem is that we don't have any data. So one big mandate for them that investors need is data.
Right.
Who is going to come into the Caribbean if they don't know that we have, 10 private equity funds that have raised 400 million in capital and had successful exits, or there's a unicorn that came out of the Caribbean. So it's a big mandate of the Alternative Investment Association to do that. And lastly, one of the things too is that having done all of that, the association now needs to take a lot of what we did in Jamaica and share it with our counterparts, our partners within the region. Because one of the interesting things is that all the funds that were raised coming out of Jamaica, all of them, and by the way, we invested $4 million in funds, and all of these funds together raised over $440 million US, which have invested about 100 million in Jamaica and the rest throughout the region. So they all have a regional mindset, a regional strategy. So it was important for now the Caribbean Alternative Investment Association to now take our learnings and to share that in the region.
It's a useful template, definitely.
It's a useful template. And one last thing that we want to also do is we want to engage regional partners in a discussion around a regional fund of funds. As I mentioned, we invested $4 million. Most of that came off the Development Bank of Jamaica's balance sheet. So it was a fund, really a fund coming off the balance sheet that was invested in other funds. So it was, quote unquote, a quasi fund of funds. So we believe that based on what we have done, if we were to now look at, you mentioned scale earlier, if we were to now look at the possibility of a regional fund of funds, that we get a partnership from regional governments with international development partners to create a larger fund that can then invest in funds that are operating at the local level. We're talking about, a local impact SME fund that's investing in St. Lucia or investing in the region.
Right.
These small fund managers know the investments in the region, but they are not able to raise the kind of capital to actually be able to take advantage of opportunities. And you're talking about scale, a regional fund of funds that can actually create a pool of capital for investment in an infrastructure fund, digital infrastructure, whatever. I mean, you know, IDB, I think, did a study, and I forget the number, but it's a couple trillion that they said is needed for infrastructure in Latin America and the Caribbean. So we're talking about scale on one hand, and at the same time, we're talking about small funds at the local level.
Right.
So a regional fund of funds with a mandate to be able to invest in infrastructure, in private equity, in venture capital, impact funds. I think that could be something that could be a game changer.
It seems very much so. Dr. Thomas, you were nodding along with some of what you heard, and we're going to open up the floor in a minute to questions, but I want to find out your reaction to some of the comments that you've heard throughout the session.
Okay. I love what you said. My experience has been, I have done a lot of study on how nations in one generation, the nations who have moved from third world to first world, exactly how they did it. It's one of my passions. I write books on that. Now, one of the keys is this. There is no perfect equation. The nations that have succeeded have always been culturally intelligent. So they've always had what I call culturally intelligent leadership. So your nation has an economic culture. Your nation has an entrepreneurial culture. Your nation has an investment culture. Now that culture should define your approach. And the stage of development in that nation should also define your approach. Now, if you take an equation from another environment and insert it when it's not culturally intelligent, you are going to break the system. So there are nations in which, in terms of investment, the government needs to take a very active role and actually lead. And there's need for creation of state enterprises. There's a need for a very robust approach from government. And then there's scenarios where there's a very robust entrepreneurial class, and what you need to do is enable them. So from my experience and my observation and my reading economic and writing on economic history is that it's finding the culturally appropriate equation in your nation to create the type of investment flows. It's not just a science, it's an art.
Yeah, and a complicated art. So
it's an art, yes.
So it's not necessarily the case that what has worked in Nigeria could be easily applied here.
No.
Okay. There's more I would like to ask all four of you, but I prefer to give the audience a chance. I know especially it's the end of the day, so we want to perk you up a bit, give you a chance to get involved. Please raise your hand if you have a question. Am I missing any there? Okay. Oh, yes, there. And tell us who you are and who you represent.
Good afternoon to the panel. Aston Isaac, I represent Lightwood Corporate Resources Limited. We are involved in logistics and transportation distribution residentially here in Trinidad. I want to share with you from the backdrop of my experiences as an entrepreneur, what we have discovered in our market space regarding investments and the difficulty of attracting some of those investments. I would positively say that you alluded to one of the main areas, which would be the entrepreneur's ability to assimilate all the information required to properly present to an investor We recognize that there are channels where you can access that resource, but it is still very limited in terms of the information required and the understanding from the mom and pop and family style businesses to be able to present that information in a way that it is digestible for the investor to understand. So that is an area where getting some level of resource information from you, where we can be able to develop better templates and provide some of our small and micro enterprises that we work with a better structured template so they can invite and encourage more investment. We would be definitely open to hearing how you would approach that. That's the first half of my question, if it's possible.
Is it for you or is it for me? I can just
You
say what we have done.
Anyone could take it.
Yeah, sure.
Well, one of the things that we have, one of the programs that we have funded, again, government intervening because there were gaps, is investor readiness programs. So we actually retain private sector trainers who have been trained in, how to actually build the capacity for entrepreneurs. So we retain them in what we call our investor readiness programs. So it's ongoing programs where they actually work with groups of entrepreneurs in helping them to structure their businesses or structure their pitch to be able to present to an investor, to an investment fund or an angel investor. So it's actually intervening and ensuring that there are programs to build the capacity of the entrepreneurs. Some of these are actually done through incubators or business advisory services, but it's ensuring that these are in place.
Thank you. That's the first half of the question.
Because there were no other hands up, we're going to let you tack on another.
So I'm taking advantage of the opportunity.
Yeah.
The second half of the question really relates to, it's an extension of what you would have just shared. Given that that's the intention from a government standpoint, and on the backdrop of the statement that the government should or should not be involved in certain key areas, aligning that thought process with the suggestion that possibly the state should not be involved and private sector may take a more dominant lead in that area. My very important question here is, does that align itself with the access to funding, or is it an educational based issue and that has to be addressed first?
No, it's aligned to access to funding because it is targeting the structuring of your business, the structuring of your pitch to what an investor is looking for. If an investor is looking for you to answer certain key questions, if an investor is looking to assess you as an entrepreneur, you need to be able to present that to an investor and not present something that they're not looking for. So it is aligned. And where governments are concerned, I know I can speak to what the Development Bank does. We provide funding for vouchers for an entrepreneur to actually buy the services from a private sector provider of those services in order to get themselves ready to pitch to investors. So there are grant funds. Grant funding also comes from our international development partners through the Development Bank for this kind of capacity building.
Okay, thank you very much.
Thank you. I may bring in Stephen here. I'm not sure how well you might have been able to hear the question since you're joining us remotely, but it occurs to me that in the work that you're doing with a lot of early stage startups, you might be, you and your colleagues might be on the receiving end of a lot of pitches by startup founders. And what are some of the common pitfalls that you see and how could they be avoided?
Yeah, absolutely. And I appreciate it. I don't want to get into some coffee here. So I wanted to really check 3 wonderful organizations that are active Some of that is a little too Hollywood, and you actually need to think through sequentially some of these wonderful resources that you give an investor right.
Thank you. That's definitely some good advice. I want to check again whether we have any last questions before I throw out a few of my own. Nope. Okay, I would like to return to Dr. Awosika, if I may. We have 5 minutes or so left, and you have so much experience in all aspects of what we're talking about here. What would be your advice or your keys to unlocking the full investment potential of this region and really mobilizing all the potential resources?
Thank you very much. I think my colleague earlier in her presentation had talked about a lot of the fundamentals that would be necessary in terms of unlocking it. And a lot of it also has to do with the preparation. Once you have the ecosystem of the entrepreneurs, but in a format in which on their own they'll be able to attract the right kind of investment, then it becomes a worthwhile investment, and largely usually from government or from organizations who are interested in developing the ecosystem to invest in building the right kind of ecosystem of trained and prepared entrepreneurs for the defined vision of the region, and then having the collective funds that can be distributed through. I mean, there's a lot of impact funds that are available right now, and setting up a wholesale impact fund for the entire Caribbean region, which is then distributed per need based on the different size and scale of each of the countries within the region, will be a major must do, because it would facilitate the opportunity for each region, no matter how big or how small they are, to be a partaker in what is a regionally designed fund that has local context and can then help to build the strength that is required in each of the areas. Building the ecosystem will be key. Creating the right kind of funding in a format that is affordable and sustainable for each of the different regions will also be major. Because when you look at the peculiarity of each area, you can define it specifically in a way that,
Sure.
I remember the president of the development fund in Nigeria. We have a culture where people gather money like every day and need to serve like a collector. And in trying to develop a lot of the small, medium-sized enterprises as well, they use the same system to get at them. You can get a loan as part of the group, as part of the cooperative, because you're too small in the room to get it. However, because you're loyal to your cooperative, you will never betray them by not paying back the money. That then became how giving money to people at that level was a risk in order to grow the enterprises. And growing them collectively also makes them able to deliver the quantum that was required by higher off-takers from them that needed volume that the individual entrepreneurs could not deliver on their own. So there will be different formats that will be developed that will be contextual to each of the countries and communities and the industries that they have specifically chosen to develop in. So there isn't a one shared fits all. There's going to have to be a definition of what is required in each area. But also, whilst they're separate, there must be the collective, because the collective part will make it easier to track the fund within the region, but also bring the infrastructure that allows the distribution of it in order to achieve the results. Thank you.
Thank you very much. So for sure, we can take the learnings that can be applied here while bearing in mind we need to have local solutions as well. I think we will finish there because that's a great note to end on, and we're coming to time. So thank you for the questions that we had, and thank you most of all to our excellent panelists for joining in person, but also dialing in from San Francisco in Nigeria. And now we'll hand back over to our MC.
Thank you. Ladies and gentlemen, I know that it is the end of the day. However, I would love for you to kindly show your appreciation for our moderator, Courtney Fingar, as well as our last panelists coming to us remotely, as well as those on the stage. I think listening to this conversation certainly is a wrap-up of all the conversations we've been having. There was an overlap between some of the things that our keynote speakers were saying, our presenters and other panelists were saying. The biggest takeaways for me, I guess, for the entire day is it isn't enough to just have great ideas and to be creative. It isn't enough. It is more important for us to also now be business-minded. Do we have the data? Do we have the insight? And can we articulate properly what our business has to offer? Not just the community locally or regionally, but globally. Something that Dr. Awosika said was collaboration. Sometimes to attract really good investments, you can't do it by yourself. So how about we try to find partners and collaborators who can help us to collectively get the volume, to get the business, and to get the buy-in. And finally, for those of us who are not thinking about it, a lot of investors are looking for companies that are including ESGs and SDGs. Ladies and gentlemen, that brings us to the end of day one. How was it so far? You guys are like, Terry, are hungry. You know, we had the lunch, we did the coffee, we had the comfort break. We are done. Thank you so very much for your kind attention. We will see you tomorrow morning where we have more conversations, where we dive and we delve into the areas. We're looking at agri-tech, we're looking at ICT, digital business, transportation, and logistics, as well as renewable energy. So we will see you back tomorrow, bright and early. Come with your questions. We will deliver your answers. Stay safe, and if you have the time, please try to see what you can tonight in Trinidad. All the best.